Things could get pretty wild in the stock market. We need to talk about it, see what exactly the impact is on the charts for the Trump tariff drama that's taking place right now, and then the retaliatory tariffs that could be coming our way. And, well, that could spell inflation. The markets absolutely do not like the uncertainty. They do not like the inflation, and they do not like the start of things here. So we're going to cover SPY, QQQ, IWM for the S&P 500, NASDAQ 100, and Russell 2000 stocks, which I've talked about being extra sensitive to inflation news, recession news, you name it. And we can see that reaction in the market this morning. And then also Bitcoin, what in the world is going on? And then XRP will also give coverage on that as well. So let me pop the chart up here for SPY. And I talked about this rising wedge pattern that we've been in. And it's weird how news tends to coincide with critical moments for these formations with the S&P. And so you can see the rising wedge pattern falling out of this bearish thing. You can see that we tried a couple of weeks ago, as this is the weekly chart, the week starting with Monday, January 13th. We tried, then recovered right back into it. And I said it was really important to get back on top of this line up here, which is 609.83. And I kept saying that is the number to sit on top of. If we do, it's bullish. If we get rejected off of it, that is a bearish thing. Well, what happened to us on Friday, ladies and gentlemen? So let me zoom in here on this for you so that you can see that movement that we got. There we go. There's Friday's candle. Look where we touched. We just happened to touch 609.83. I've been talking about that since well before this peak back here in December. We came and touched upon it again and got rejected and sold off Monday, January the 27th, and then we got back up there on Friday. Things were looking so bullish to be up there, and I said we need to sit on top of it to continue it. And then the Trump tariff thing comes out. We get rejected off that line, selling back down. And then today, seeing what's happening with the tariffs for Mexico, China, Canada, you name it. Well, that spells downward market for us right now. So we want to watch out below this territory. We're down below the 50, down below the 20, down below this trend line. And these two trend lines down here that I talked about before when we were looking at potential head and shoulders pattern, which never came to fruition, but got darn close to it, 581 to 586. Those are still the supports to watch, being that we're south currently of this trend line. This could be somewhat of a bigger sell, depending on how much drama, how much fallout is that we see from the Trump tariffs, especially involving the inflation that could take place on it. And then, well, does it lead to recessionary fears? If it does, watch the bond market. As a matter of fact, we can pull up TMF as well, and you'll see with the 20-year Treasury currently up in the pre-market right now, inflation kind of a bad thing for it, but the economic implications that we could have could be even worse. And I think that's why we see the net upward pressure on TMF this morning. So let's move over to the Qs. There we go. 503.52 is that number to stay above right now, sitting on top of this trend line, perfectly at this trend line. As a matter of fact, this is critical for support for us to see that trend line continue to hold from this peak going back here to Monday, December the 16th. And then we broke up above it. This I talked about when we got back here the last time, about mid-January. I said we need to get back on top of that trend line. If we do, it's bullish. You saw it pop down below it. Can't keep a good dog down, pop back up above it again. So watch and see for that breakdown below it. Like I said, this could be one of those moments where you see more of a sustained sell. So even though we have a pretty significant drop, we could potentially see this dragged out a little while longer and see those implications take place. The world of politics is pretty darn quick though. So we'll see the sort of game that's being played right now, although I can't see Trump pulling back, like just being like, okay, well, let's cool things down here. Instead, I see him more, furthering to double down on top of the doubling down that he's already done, where these tariffs are involved. This just could be a current narrative developing for us in the markets and something to watch out for. That being said, we should take a look at IWM, which tracks the Russell 2000. I said we had to get on top of that 50. We failed to get on top of the 50-day. 1, 2, 3, 4, 5, 6, 7, 8, 9 different attempts that we got near it. And then we had 1, 2, 3, 4 touches on it during the regular trading hours. Just couldn't get over it last week. This week down below this trend line, which was important that we stay above. The next important line is that orange 200-day that you see coming across the screen right here. We want to stay on top of that. If we fall down below it, watch out for a rejection. If we bounce off of it, now mind you, if we get down to it, could be a good place for a bounce. I said that for Apple, and on Apple's chart, if you go and you look recently at their near touch on the 200, they had, I think, like a 15 to 20% bounce, including their earnings off that value. So we Could see something like that for the Russell 2000, but like I said, if this is a time where we're going to see more of a sustained sell because we expect there to be a lot more inflation coming our way, the Russell 2000 stocks are going to be the first to feel it. And so they're down quite a bit here, 2 1/3% right now in the pre-market hours. We'll see if that keeps up. As a matter of fact, we could rise a little bit early in the market and then dump from there. We're going to have to watch and see where those supports and resistances are. The 200-day is that big line to watch down below. The 20-day is that big line to watch up above. So the 20 days happen to be right around 224 to 225. The 200 days right around 216 at this point in time. And they do change throughout the day as that closing price updates, and then to the final close you get locked in at least until the next trading day comes along for us. So watch the 20 up above for resistance, watch the 200 down below for support. Let's move over into Bitcoin. This line right here, I talked about this and it seemed like nobody else, and I don't say this kind of stuff very often, but it did seem like nobody else was talking about these previous peaks that we had back in 2021 being significant for finding support over here, while resistance at first, which you blew through, by the way, had enough momentum to do it. We've been sitting on it for support ever since. Well, what happened more recently with Bitcoin? Well, if we go to the daily chart, we have a double top. I said 107,892. This is like the 609.83 I talked about for SPY. 107,892. We had to get a candle on top of that, and we never did. We never could. And because we didn't, we're back down testing support again. And look at where we're finding that support. It's back on that trend line, sitting on top of the peaks. I can't stress enough how critical this support is for BTC. If that breaks, we could see 85, we could see 78. Being so critical, I wouldn't be surprised, especially if we get more of a sustained sell in the overall markets and that we go further risk off. Watch for that 200-day for Bitcoin for a bounce zone. If we break down below it and retest it and it's upheld as resistance, that could be a further sell for us. So we want to watch this trend line that we're at right now, this white line going across your screen. As a matter of fact, I'm going to click on it and I can change it from 2 pixels to 4 pixels so you can see just how bold that line is, because it is so darn important. And then, like I said, that 200-day down here in orange, that's the next thing that you want to watch for if that line breaks, because that is a pretty big line. But smashing through that and upholding that as resistance is going to be a fairly bearish thing. Now, mind you, if it holds as a support, you have the 50-day up above and the 20-day up above that. We have to watch and see, because if breaking back up above those, once again, still in bullish territory. I know this sounds like a lot of back and forth, but we really do have to watch and see for these critical moments of breaking to the upside or breaking to the downside, so we know what direction to select, or that we have the best information possible from a technical perspective to pick which way the chart's going to go next. Let's take a look at XRP. Look at this that we have for this bottom trend line right here from the bull pennant. Now, mind you, we got the consolidation pattern breakout to 340. I said we had to sit on top of that, just like what we had Bitcoin, just like what we had for SPY, just like what we had for IWM. Need to sit on top of that for bullishness. Couldn't get it, selling off with the rest of the crypto market, going from Friday all the way up until today, but finding massive support, by the way, right at about $1.76. So we want to keep an eye on that price. As a matter of fact, if I were to go out to the weekly chart, I wonder if we'd see anything. We do. Check out this previous peak that we have right over here, and it's no wonder that we're finding that support right at that area. It is nice to see that massive bounce back up on top of support as well. So XRP down a little bit, definitely not out of the race right now. As a matter of fact, I think that this is one of those moments that is very well set up, that we could get that downward pressure to be just enough to kind of rest things out of people's hands, to get them, to use a 2021 phrase, to paper hand, if you will, just to let them sell at the bottom, so that way people buying can get stuff on the cheap, and then we see it go back up again. Now, mind you, I think that this drama might drag out a little bit. We're going to have to pay attention to it. I don't think that it's small news, and I think Friday shows us that it's not necessarily small news. So here's TMF, and like I said, high inflation, not good. The fact that we're up in the pre-market for TMF when we closed at 39.90 and now we're up to 41.50, this is, in my opinion, bullish for TMF so far. At least it's seen as a net positive for that long-term treasury. So the inflation part, like I said, not great for long-term treasuries, because it kind of eats into the profitability of those long-term bonds. However, if this is something that turns out to be recessionary, that if we get this enough of a push, that flight to safety, if you will, I think TMF is reflecting some of that hedging to the bond side of things away from securities. So this could still be anybody's game. By the way, getting back up above 41.50 is huge for us. So right now you can see that we keep on getting rejected up here. This could be an inverse head and shoulders. And if I draw this on here for you, shoulder and then shoulder over here, and then the head of that in between. And then if I were to put a neckline on here for you, there we go, horizontal line, got my magnet on there, perfect. Right there, so 41.36 actually looks to be that line in the sand, and right now we're trading up above it. And if this does happen to play out in terms of an inverse head and shoulders as a bullish thing, I click on that, and then if I hold down my shift button, friend, there we go, right about there, and we're going to just copy that and paste it, and I'll grab this tool for you, and we drag that up there to a breakout moment. If in fact we are breaking a neckline, it could put us up to the mid 40s, about $46 per share. I'll even tag that for you so that you guys have something to refer back to should you look back to this. There you go, 46.32. If we are seeing an inverse head and shoulders on TMF, and if we are breaking up above the neckline, that's another about 10 to 12% from where we're at now. I was again about to say 15%, but 15% of 40 is that $6, and we're already about midway above 41 in the first place. So 10% is a little bit more appropriate, maybe 12 to give a little bit of a buffer just from that estimation type perspective. And let's wrap things up with Roblox. Roblox broke up above, like I said, bullish thing to break up above a rising wedge pattern like this, trading down below what we see up here for these Fibonacci extension values that are up here. So falling back into this with the rest of the downward pressure for the market, this will do really good for my put option play that I have for Roblox. Thank goodness, because this week is about it for that play because I went aggressive with the expiration date that I went on there. And then for Netflix, this one I actually went long, and I said that we'd actually have like a bit of a hedge position on this. So I thought maybe from this pennant type play that we would get that push up to 1030. Kind of fell short, especially with the rest of the market selling down like it did. I'm probably going to have to let that one go in the near term. Should be traded off with what we see from Roblox and some of the other hedges like TMF that I have in my portfolio. So guys, if you want to see my buys and sells, if you want to talk to me and my community members, there's a link for the Patreon down in the description. Click on that, sign up, and head on over to the Discord that's part of that. You can see my buy alerts as they go out there. You can also see my technicals that are over there, and you can be part of the community, and you can support this channel. And then also down in the description, if you'll learn to do this technical analysis yourself and also learn how to trade based on technical patterns, there's the bread recipe developed by Stockmo through Stockmo Academy, which teaches you the technical analysis, teaches you how to set up the bread recipe, teaches you how to trade on it, and then you can look for those buy times and those sell times that you have to decide on, because we will not tell you when to buy or sell, and that bread recipe will not tell you when to buy or sell, but it will show you when those opportunities do arise if it matches up with the rest of the research that you put out there. And you guys can get it cheaper using the code word DOCTOR, DOCTOR, when you sign up for that course. Thank you guys for watching. I really do appreciate it. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. And we'll see you next video.